Welcome to Market MakeHer, an investing education podcast designed to help you navigate the stock market and achieve financial empowerment from her perspective.
In this week's episode, we are understanding the stock market and how it works.
I'm Jessie Dana-Wee, here to ask all the questions that a beginner unfamiliar with the world of investing would want to know.
And I'm Jess and Skip, the finance expert, here to answer and explain all of those questions you ask.
And today our theme is hats. That's why I'm wearing a witch hat.
And I decided to wear my Nasdaq hat since we're talking about the stock market, and we'll talk about Nasdaq.
Yes. So since today, episode 2 is what is the stock market and how does it work? Jess, what is the stock market and how does it work?
It's a marketplace where you were to buy and sell stock. Just a lot of buyers and sellers that are put together. It's a place just like you would go to the mall and you want to buy a sweater, you want to buy some jeans or some new shoes. It's a place that you can buy and then say you could go back to that mall and sell them back. So it's just buyers and sellers in one place. And that's it.
Like when you go to one of those Plato's Closet type places, Poshmark, any of those, where like sometimes that purse someone might have bought 10 years ago had like it's gone up in value or it's more valuable now, or
absolutely.
So you can sell it for more money, or sometimes it goes
less.
down. Okay,
that's a great analogy. James got me a Chanel bag for my birthday, and that actually beat the stock market last year. And it's a type of investment. Yeah, it did.
How does a bag beat the stock market?
It went up in value. And then there's a marketplace for that, Rebag. So I could take my Chanel bag that went up $2,000 worth of value and sell it back on Rebag. So it's just a marketplace where you buy and sell items. That's all the stock market is.
Okay. That like makes it seem so much easier to understand. Okay, so we know what the stock market is, like the concept of it, and what is like bought and sold, traded in the stock market.
Mm-hmm.
So what would be the next thing we need to understand how it works?
How we would measure it or how we look at the stock market. A lot of time on TV, you'll say, oh, the market's up 100 points, or we're down 300 points today. That's just how we measure the market. The market is just a collection of stocks that are bought and sold. Your brokerage firm connects you to that marketplace, or Rebag did the same thing when I bought my Chanel bag. The stock market is measured collectively through something called an index. The 3 major indices come into play: the Dow Jones, the S&P 500, and the Nasdaq. Now, let me preface this with, those are the 3 major indexes that we talk about on TV all the time, or that you probably hear. There are hundreds of indexes.
Indices and indexes are the same thing. These are the ones that we hear about all the time.
That's right. And that's just a measurement of the stock market, because all it is a bunch of stocks collectively together, and it gives you a value. If I were to take all of the purses in my closet and say how much they were worth, or even my whole neighborhood, my purse could be the purse index, and then my neighborhood would be my neighborhood index.
Okay, I'm backing up to a very basic question. How would you define an index then? You're saying the indexes are ways to measure how the stock market is performing, or how like a certain set of stocks are performing?
Yeah, it's actually both. So it is a certain set of stocks, and that's why there are a lot of indexes. And we narrow it down to 3 that we talk about because they give you different views of the overall market. The Dow Jones Industrial Average, that was actually the first index ever created by a guy called Charles Dow way back in the 30s, and it only has 30 stocks in it, 30 of the biggest stocks. Disney's in there, McDonald's, Nike, Visa, Home Depot, really, really big companies, but there's only 30 stocks. So there are thousands of stocks across the stock market. It's not a good gauge of how the overall market is doing because it's just a super, super small collection.
Indexes are different groups of stocks. We have 3 major ones that we always talk about. We can kind of measure how the stock market is performing based off of those major 3 indexes.
That's right. There's criteria to be in an index. It's like the elite club of stocks. So you can't be in that elite club unless you meet those requirements. And if you don't meet those requirements, you're going to be kicked out and somebody's going to take your place. And I suppose the Dow Jones Industrial Average might be the most elite of clubs because it only has 30 spots available for 30 stocks. But that's why
that
it's
makes
not
sense.
a good measurement though, because it's only a
30.
small...
That's like not much.
Exactly.
Okay.
So that's why you have the S&P 500. That is broad-based 500 securities. It covers every sector, has all the stocks that are in the Dow Jones Industrial Average and then some. And that one is market cap weighted. That's a term that we should talk about. So market cap is going to be your biggest stocks. So Dow Jones Industrial Average is price weighted. So that just means if you have the highest price, you are the biggest player. In the S&P 500, it's your price, but how many shares you have outstanding. So if you're $100 and only, just for example purposes, have 100 shares, you are going to be worth less than somebody that's $100 but has 1,000 shares, because that's a bigger market cap, if you see what I mean. So it's your total market value that determines how much weight you have in the index.
Yeah, hold on. We got to like go over that again. Dow Jones is price weighted.
Mm-hmm.
And then S&P 500 is market cap weighted. I still don't understand what market cap weighted means.
So market cap just takes it a step further. If you have one Chanel bag, we keep going to bags, and I love this. If you have one bag that's worth $10,000, but there's only one that's available, that is not telling you how the handbag market is doing at all. But if you've got 100 bags worth $10,000 each, that collection is worth way more than that one. And that's just an analogy for a stock price and the amount of shares that are available.
Okay, so the Dow Jones is price weighted, and you're saying that's more just like the price of the one bag. That's the difference, where the Dow Jones is looking at the price of one bag, whereas the S&P 500 is market weighted and looking at the whole market, like how many shares there are in each stock. It's a bigger picture, I guess.
Yeah, it shows how big the company actually is. So let's separate it out between brands. So you've got one Chanel bag worth $10,000. But then you have 100 Louis Vuitton bags worth $3,000 each. The Louis Vuitton is a bigger company than Chanel. Even though Chanel is more expensive, what the methodology of the indexes are saying is, yeah, that Chanel bag is more expensive, but this Louis Vuitton collection is so much bigger and should have more importance than Chanel. The price of the security times how many shares outstanding. And that equals market cap.
I'm literally taking notes as you're talking. Got a notebook.
The Nasdaq, my hat, that's very tech heavy. So, and it works just the same as the S&P 500. The difference is it isn't as broad based. That one has over, I think it's 3,600 stocks now. So it has the most stocks, but they're mostly in the technology sector. It's broadened out, but it's mainly tech. If you wanted to know the health of the stock market overall, which just means what are the prices of all of the stocks right now, the best gauge is the S&P 500 because it has the most variety and it's also market cap weighted.
Then you said there's tons more indexes than just those three, right?
So many. So the S&P 500 is supposed to be the 500 biggest stocks in the entire market, the biggest companies. And you're the biggest company based on your price and how many shares exist. And do you know what those biggest stocks are right now?
Apple or...
Ooh, you nailed it.
Okay.
Apple is up there. It's like top,
what else
top
would it
three
be?
right now. Yeah. It's Microsoft, Apple, and Amazon. But they have the highest price stock and the most shares. So they end up driving the market is what we call it, because they have the ability to move the market quite a bit because they are the biggest companies.
Are these only American companies?
There are indices that cover everything. The Dow Jones is mostly domestic or US based. Anything that's tech heavy has global exposure. So like Apple, you can buy an iPhone in any country. And so their revenue exposure, revenue is just where you're making sales, is everywhere. So anything foreign can affect the Nasdaq more because it's tech heavy, which has the most global exposure.
That makes sense. I feel like we should have a section for Jessie's notes on our episode equity on the website. We have your beautiful infographics and then I'll be like, and here's Jessie's notes, because
I love that.
I'm like, wait, what is this?
So going back to Apple is actually in the Dow Jones Industrial Average. It's also in the Nasdaq and it's in the S&P 500. So
I was going to ask that. So these indexes can totally have the same stock. Like you don't have to have one stock in one index. You can be in
so many. Yeah. Because your index is just a measurement of something within that criteria.
Okay.
That's all. And you can decide.
So if you're a tech company, but you're a big tech company like Microsoft, you can be in the Nasdaq and also the S&P 500. And since Microsoft's so big, probably in all three of them, right? Also Dow Jones.
Yeah, I believe it is in all three of them. No, that's not up to the company. That's up to the indice.
The requirements of that indice.
Mm-hmm.
Okay.
That's right.
Like, yeah.
If you are good enough to be in that elite club.
Right.
Yes.
And if you're not good enough to be in any of those three major elite club indices, then you're just in a smaller one.
You are. So that brings up another really popular one called the Russell 2000. That is made up of small caps, and that's called the value index. You have a lower price or lower share volume. So you don't meet the criteria to be in those elite clubs because you're not the biggest company.
So when you say small cap, large cap, what is that? Like, what do we mean cap?
So large cap is your big corporations, 10 to 200 billion. Mid cap is 2 billion to 10 billion. So still big, and then small cap is 250 million to 2 billion. And then there's micro cap, which is 250 million or less. You don't have
I didn't even know there was a micro cap.
There is a micro
I never even heard of that.
All of this you don't need to memorize. Like literally when you pull up stock quotes, it has all this information for you.
I think it's just good to know because I've seen the large cap, medium cap. I've seen it like looking at things to buy. It was very confused. I was like, I don't even know what these things are. I don't know what these things mean. I definitely don't want to overwhelm our listeners because this is supposed to be beginner, and it is. These are all things that you're going to see even if you've never looked at anything regarding the stock market or a stock. We're going to break this down, and I'm asking these questions now because it might come up later. I think as people start actually kind of like looking at things, they're going to see, oh, that's that large cap thing that I heard them talking about.
Going back to Apple as our example, their market cap is 2.76 trillion. That's why it's one of the biggest stocks in the entire market. Their share price is $175. This is as of Friday, which is May 26th. This is for example purposes, disclaimer.
Yes.
So their shares outstanding that is 15,787,154,000. So that number times their share price of about $175 per share gives you the 2.76 trillion figure.
And that's what makes them large cap because they're into that. They're in that large category.
Yeah, they're way, way over.
So we covered the big three indexes or indices. Those are how we get a health check of how the stock market is doing, right?
Value the index. That's all it is what's the value of that index now? Normally somebody say, oh, the Dow is this right now, up 100 points. That just means the change collectively.
Yeah, I never understood the points.
Literally.
Like, how do you know? Okay, so the points translate to dollars or?
Yeah, it's the terminology that is so unnecessary. It's literally dollars.
Okay, so what does the consumer have to do with the price? What do we all have to do with the price?
Apple is such a good example. Primarily their sales come from iPhone sales. We want to know, is there anything in the world that affects consumer behavior? And the consumer is just you and I. That's why we look at economic indicators to figure out what the stock market's going to do. Because the stock market, not only is it just a gauge of prices, people are constantly trying to figure out what price everything is worth. Is understanding if people are going to spend money. If there are more people willing to buy, then it should go up in value. They're going to have more iPhone sales. It's literally that simple. If there's record low unemployment, that means everybody has jobs. And if people have jobs, they have an income. And if people have income, they like to spend money. Consumers love to spend money. And normally when there's record low unemployment, there is a higher stock market. The cost to borrow. Right now, interest rates are going higher, which means it's going to cost more interest for you to put on your credit card, or you're less likely to go buy a house.
Or you just don't want to spend all that extra interest money on buying a house right now.
That's going to hurt stocks that are primarily focused on housing. What is going to affect consumer behavior and where are they going to spend their money? That's how consumers drive stock revenue. If you pay attention to trends, because the stock market is literally around you. Like, I know we're not going into sectors, but we can very briefly. Sectors, we talked about technology. That's literally Apple, this microphone in front of me, all these lights, any company that touches the development of that. And then utilities, that's my light bill and my electric company. I don't think mine specifically is not public, but a lot are. That's the first thing you're going to pay, the last thing that you won't pay. So that's why utilities tend to be kind of this safe type of investment, because they have less risk of people not paying their bills because we need our electricity.
I
on
never
to
even
survive.
thought about that. Yeah, like that makes a lot of sense. Like I
And
never even thought about investing in
yeah,
utilities. I'm sure I do. I don't know where or how, but yeah, that makes
it's
sense.
it's in the S&P 500 because that's broad based. That's why people always say, and like all of these money gurus, the passive investing, which means you just mirror your portfolio to the S&P 500 because it will always be the biggest 500 companies, and know that they go in and out of that elite club. If you were to take the 200 years of the S&P 500, it is not 200 years of the same stock at all.
I think it's worth saying. So we're getting really like deep into what the stock market is and everything. And I just don't want to scare off our listeners that have not ever started yet, or don't have a 401k yet, or have not invested anything in the stock market, or if you have and you have no idea what's going on in there, because we're going to get to all those things and help everyone, but like we're trying to understand how all this works together so that we know how to make informed decisions when we do start investing our money and actually making those choices.
And know that there is so much to explain, and you don't have to know all of this at all. And we'll have resources. But if you want to have those good conversations and just want to understand how it works and honestly get the peace of mind out of it, because a lot of what people are going to tell you is to invest passively, and indexes like this that have select criteria to be in that elite club, that's so you don't have to be a stock picker because somebody already has methodology to pick stocks for you.
So, okay, we talked about the consumer. And how we can affect prices of the stock. We talked about how interest rates, like when housing or mortgage loan interest rates are higher, that also affects stock. What about the debt ceiling?
Yeah, so those are all external factors that affect consumer spending. The debt ceiling is an example of fiscal policy, and interest rates is monetary policy. Those, again, are just fancy words for very simple things. Fiscal policy is just what the government decisions do that affect you. So the debt ceiling just means that we are the only country that has a debt ceiling, first of all.
Oh my God, really? I didn't even know that.
Yes.
Okay.
It's just to set a control in our spending. So it's like saying, hey, we've got too much credit card debt. When we hit this, let's reassess. We can
it's like your max limit for your credit card. Okay.
If they were to raise the debt ceiling, which apparently they made a deal over the weekend, but we're not getting into this too much on this podcast, so don't worry. But all it means is we can go ahead and spend on what we agreed on. It does not mean that they're going to have more spending. It's just like, oh, we already agreed that we're going to spend on the Inflation Reduction Act or whatever. Please authorize that spending that we already said we could do. We just hit our limit. Remember during COVID, and a lot of people got stimulus checks. That affects consumer behavior more because you're more likely to spend money because you've got it. And you could have spent that on your utility bill. You could have spent it at McDonald's. Those are all still stocks that are public companies that would make the market move in value. Inflation does the same type of thing. If things are more expensive and you don't have more money, you're going to spend less. Everything comes down to how much money do people have and are they spending it? It's really
the people have the power. So
they do.
Let's make wise decisions with
That's
how we spend our money and who we want to give it to. I would love to have an episode on ethical investing and just like, obviously like we want to invest for money and making money, like, retirement, whatever. But like, it'd also be cool to dive into who we want to invest our money into, what companies like we actually want to give our money to, and still try to make a profit or make money for our retirement.
And you absolutely can. There are so many ways to look at that. We call it ESG, so economic, social, and governance. And you can screen stocks based on that criteria and even have portfolios of your own. There's even indexes that track that. So there's so much we can get into. And the thought behind that is say you are having really bad practices, you're a company, and you are maybe in electronics, but you dump everything in a river. And then that's the way that you dispose of your waste. Well, if there's like this government regulation that comes in that says you can't do that anymore, you're now going to have a big expense, but your other companies that already took those ethical standards aren't going to have those big expenses and maybe even have tax incentives to keep doing that. So ESG investing can actually lead to really big profits because of things like that.
That's how a fiscal policy can affect the stock market essentially versus the consumer
exactly
interest or whatever you'd call it. Okay.
Yeah.
Well, I think I understand all of that.
The purpose of today's episode is just to say the stock market is just a place where stocks are bought and sold. The consumer, it affects a lot of sales, which makes the value of those stocks go up and down. And those stocks are commonly measured on 3 major indices, which is the Dow Jones Industrial Average, the Nasdaq, and the S&P 500. The S&P 500 is by far the best gauge because it's 500 of the biggest stocks that are on the market, and it's broad-based, which means it has that diversification that everybody talks about. So it's technology, utilities, clothing, just a lot of everything we see around us, which means it's a good gauge because it's a lot of things to watch. That's it. That's today's episode. It's a wrap.
That should be the TLDR version of this episode. Like TLDR. Listen to the end. Jess will tell you very simply what it is. Thank you for joining us on this episode of Market MakeHer Podcast. Don't forget, every episode comes with episode equity, which is an article and all of the questions that I asked today. You can find this and more on our website, marketmakeherpodcast.com. That's marketmakeher, HER, podcast.com.
That's right. And we also have a section to contact us if there's any questions that Jessie asked that you want more clarification on, or anything that I said that makes 0 sense, or a topic that you want us to cover. Let us know in that contact us section. And don't miss out on future episodes where we'll continue to demystify the stock market. Subscribe or listen on your favorite streaming app, and you can watch us on YouTube and see our theme of the week, which this week was hats. We are also open to suggestions for themes that you would like to see as well. You know, we got to have a little fun. And stay tuned for next week's episode where we will break down what a stock is and how it works. And remember, when you build knowledge, you break barriers. Remember, investing involves risk. There is always potential to lose money when investing in securities. Market MakeHer provides educational content and resources for informational purposes only. We are not registered financial advisors and do not provide personalized investment advice. Any information provided by Market MakeHer on our website or podcast is not intended to be a substitute for professional financial advice. Market MakeHer is not liable for any investment decisions made based on our content. For more information, visit marketmakeherpodcast.com.